Okay, back here in New York, I'm Christine Corrado with Proactive. Joining me right now is Ciaran McMullan. He's the CEO at Suncrest Bank. Ciaran, great to see you. How are you?
I'm very well, Christine. How are you? How's New York?
We're doing okay with going on considering. So you
Right.
run a community bank based in California. First off, just tell me a bit more about it.
I run Suncrest Bank. We're a billion-dollar community bank located throughout Central California and in the greater Sacramento region. We're primarily focused on commercial lending. We don't do any consumer lending, and we are 12 years old. Between 2013 and 2018, we were actually the fastest growing publicly traded community bank in the country, and that was a combination of both organic growth and we made 3 acquisitions throughout California during that time.
Congratulations on those achievements. There's a lot going right now, and I'm sure borrowing has increased quite a bit because of the coronavirus impacts to small business. What can you kind of tell me about loan growth activity in the past few months?
Well, there's really only been one category that's been exploding, Christine, and that's the Paycheck Protection Loan Program. So we are fully participating in that program. We've done 600 loans, either ourselves on our own balance sheet or working with a number of third parties. So 600 loans for about 150 million in total. Prior to the impact of C-19, we were actually seeing some very strong organic loan growth. For 6 quarters in a row, our new loan originations were up quarter over quarter. So we're particularly disappointed that C-19 has happened when it's happened, because we were demonstrating some really solid loan growth momentum.
I can only imagine. Well, how are those borrowers behaving? Are they staying current, or are there many deferrals right now?
We have about 11% of our loan portfolio on which we have modified the loans and allowed borrowers to take a deferment, either 6 months or 3 months, and either principal and interest or interest only. And in fact, if investors would like to get a more detailed understanding of that, we put a table laying out in great detail which industry sectors were seeing the highest deferment levels, and then which type of deferment we had granted them. So that's in our Q1 earnings release, and in fact, it's in our Q1 webcast slide pack as well, all of which you can find on our website.
And we've had a lot of news coming from the Fed, obviously. What is kind of your outlook on interest rates and how that might affect the business?
Look, interest rates dropped to near zero just before the impact of C-19 in an attempt to sort of stave off the worst economic aspects of it. So we've already been preparing for declining interest rates and low interest rates by doing things like making sure all of our floating rate loans have floors in them, by making sure that our adjustable rate loans have floors in them when the rate adjusts, and also by seeking to use our strong balance sheet position. We have a very, very strong liquidity position and a low cost of funds. So we've been looking to put out some longer term money, 10-year fixed rates with prepays on them to protect, for the call protection on those instruments. So we have been, we've already been preparing our balance sheet for low interest rates. And my outlook is I expect us to be in that environment for quite some time.
So I guess, what is your kind of financial outlook for the next few months? How are you feeling right now? Are you relatively positive?
I'm very positive, and it's for this particular reason. What we're doing with the CARES Act, what we're doing with the Paycheck Protection Program, what we're doing with great support, I have to say, from our regulatory bodies, what we're doing to allow borrowers to make short-term modifications of the loans and defer payments. All of these things, in my opinion, are not to delay a deep economic recession, but to stave one off. So I think these activities and the actions that we're all taking will be successful, and therefore, I'm pretty positive that this will be much more of a V-shape rebound rather than an elongated U-shape.
That is definitely good to hear. Some nice news. Ciaran, it was really great to meet you and learn more about the company. Thank you so much for your time.
No problem. Thank you very much.